When a headline about Iraq deleting the zeros starts circulating again, it hits this community differently. For many US veterans and long-time Dinar holders, it's not just another economic update. It feels personal. It brings back years of watching, waiting, and trying to separate real progress from recycled noise. That's exactly why this conversation matters right now. In 2026, the phrase is back in focus, but the real question isn't whether it sounds exciting. The real question is whether anything underneath it has actually changed. Let's slow this down and look at it clearly, without hype and without dismissing it either. Delete the zeros is not a mystery phrase. At its core, it refers to a currency reform process known as redenomination. In plain terms, it means reducing the number of zeros on banknotes to make the currency easier to use in everyday life. Prices become simpler, accounting becomes cleaner, and financial systems become more efficient. That's the purpose. It's administrative, structural, and practical. Here's where a lot of people get misled. The phrase sounds dramatic, so it's often interpreted as a signal of sudden wealth or a massive overnight change in value. Historically, that's not how these reforms work. When countries remove zeros, they are typically adjusting the face value of the currency while keeping purchasing power balanced. In other words, the numbers change, but the underlying value does not magically multiply. That distinction is critical, especially for a US-based audience that has been exposed to years of speculation. But don't mistake that clarification for dismissal. A currency reform like this can still be significant. It can signal that a country is trying to modernize its financial system, strengthen its banking infrastructure, and improve internal and external confidence. Those are serious moves. They just don't happen in the form of instant windfalls. So why is this back in the conversation in 2026? Because timing is everything in financial reform. And people are starting to ask whether Iraq is closer to the kind of environment that could support a move like this. A plan can exist on paper for years, even decades, but it only becomes actionable when certain conditions are in place. Those conditions include banking capability, economic stability, government coordination, and public readiness. Iraq has been working on these areas for a long time. Progress hasn't been perfect or linear, but there have been ongoing efforts to strengthen the banking sector, improve financial controls, and align with more modern economic practices. That broader reform picture is what's pulling this topic back into focus. It's not just about currency notes. It's about whether the system behind those notes is strong enough to handle change without causing confusion or instability. For veterans and disciplined investors, this is where perspective matters. The smart approach is not to chase headlines, but to watch direction. Are institutions improving? Are reforms continuing? Is the country building a more stable financial environment? Those signals matter far more than any single phrase being repeated in the news cycle. There's also a psychological layer here that deserves attention. When a topic like this stays alive for years, it creates a cycle of expectation. Some people begin to anticipate a life-changing event. Others grow skeptical and tune it out completely. Both reactions miss the middle ground, where the real story usually sits. The reality is that Iraq's financial evolution is a process, not a moment. And deleting the zeros, if it ever happens, would be one step within that larger process. Another reason this conversation is gaining traction now is because Iraq's economic direction has broader implications beyond its borders. Currency structure affects trade, investment, and how international partners engage with the country. A simplified, more organized currency system can reduce friction in global transactions and make the country more accessible for business. That doesn't mean a sudden jump in value, but it does mean better alignment with international financial norms. This is especially important when you consider that no currency operates in isolation. If Iraq is aiming for deeper integration into the global economy, then modernizing how its currency functions becomes part of that strategy. That's a practical, grounded reason for why this topic keeps resurfacing. It connects domestic reform with international positioning. At the same time, it's important to stay disciplined in how we interpret what we're seeing. Discussion is not the same as action. Just because a policy is being talked about does not mean it is being implemented tomorrow. Governments move carefully with currency reforms because the risks of mishandling them are high. Public trust, Price stability and everyday transactions are all on the line. That caution helps explain why this idea has been revisited so many times without being executed. It's not a simple switch. It's a coordinated transition that requires preparation across multiple levels of the economy. And that's why 2026 is being watched more closely. Not because there's a confirmed event, but because there's a sense that more pieces may be coming into alignment. For those holding Dinar, especially within the veteran community, the most valuable mindset right now is one of grounded awareness. Understand what the reform is designed to do, recognize what it is not designed to do, and pay attention to the structural signals rather than emotional narratives. If a delete the zeros reform were to move forward, its most immediate impact would likely be on how money is represented and used inside Iraq. It would simplify transactions, improve efficiency, and support a more modern financial system. Those are meaningful outcomes. They just don't fit the narrative of sudden dramatic gain. And yet, none of this makes the story irrelevant. In fact, it makes it more important to follow correctly. Because when a long-standing policy idea keeps returning to the spotlight, it usually means it still has a place within the country's strategic thinking. It hasn't been abandoned. It's being reconsidered within a changing environment. That's the real takeaway here. Iraq's delete the zeros plan is not a promise. It's not a fantasy. It's a policy tool that becomes viable only when the system around it is ready. The reason it's being talked about again in 2026 is because observers believe that readiness may be improving. Whether that leads to action or not remains to be seen. But the renewed attention tells us something important. The conversation is active, the direction is being watched, and the broader reform story is still unfolding. For now, the smartest move is to stay informed, stay patient, and keep your focus on real indicators. Watch the system, not the slogans. Because in the end, it's not the phrase delete the zeros that matters most. It's what Iraq is building behind the scenes that will determine what happens next.